So I already recorded and uploaded this video, but when I watched it, I realized it was cropped in a weird way. It was cropped on my second monitor. So yeah, recording on the ultra wide monitor now. Anywho, let's recap today's trade. Today you read the title. We ended up taking a $100 loss. This was on the evaluation account. All of my trades for now are on the eval. I will let you guys know once they transition out of the eval. Anyways, getting on to it, what happened? Let's start off on the daily time frame because we ended up trailing our stop loss amazingly today. But I want to recap everything, see how we can improve, and how we can refine our trading strategy further. What happened in order for us to have a bullish bias? Well, starting off with a bias, 2 days prior, so Thursday or Wednesday, whatever, we ended up sweeping out this previous candle low on the daily time frame, allowing price action on Friday to be bullish to the upside. Price action was bullish to the upside on Friday. Then today, well, last night, Sunday, we ended up forming a 4-hour PD array, 4-hour fair value gap. What did we do? Well, we were within this range on the hourly time frame. If I scale down, validating this 4-hour fair value gap, move this down here. For the value validation of it, we were simply consolidating, rejecting off of it. Price action validated, displaced to the upside, strong displacement to the upside on the hourly time frame, formed a new hourly fair value gap, giving us confluence, and formed another one, giving us extra confluence. That yes, we were beginning to form bullish PD arrays. I can't believe I just said, oh, I sounded stupid there. Form bullish PD arrays to the upside, giving us bullish confluence, right? Now, what happened throughout the trading day? Well, New York market open. We ended up being, well, bullish to the upside, continuing to be bullish to the upside. Why? Well, I have no idea. But price action decided to be bullish to the upside, validating that prior confluence from those previous days today. Price action continued to the upside, formed a 5-minute fair value gap, which we came down, retraced, validated it, and continued back to the upside. Now, some of you may ask, well, Lonnie, why didn't you just execute here? Because of news. We had news data released today, and I did not want to get caught in all the mumbo jumbo of news, possibly seeing price liquidate to the downside, blah, 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 blah. I didn't want price action, or I didn't want news to be an excuse for price action to stop me out. Going to the 1-minute time frame, because we see there were no 5-minute retracements, what and how did we end up executing upon? Price action ended up not mitigating these or this 1-minute fair value gap, continuing to the upside, so leaving this unmitigated. Price action continued to the upside, blah, 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 blah. We clearly see that. What did it do? Well, formed a 1-minute fair value gap, mitigated it, validated it, pushed the upside. Then this is where our actual trade entry was, or at least was looking to be. If we go on replay right here, I don't want the chart to be too messy, so we'll clean it up, make it look somewhat nice. Right here, validated this 1-minute PD array, then formed a new PD array. I wanted this new PD array to get formed as extra confluence, showcasing that yes, we are bullish. Our execution was not at the fair value gap, however, it was at the candle closure. You may ask, well, Lonnie, why? Because I was calculating my contract size. It was 3 minis or micros, whatever, micros, $100 loss, dough. Anyways, 3 micros. Ended up calculating it. And at this point, I was deciding whether or not I even wanted to get into this trade because I had quote-unquote missed the fair value gap entry, but I didn't want it to be an excuse for lack of learning or anything of the sort, or have it be an excuse for, oh, I want to win this trade, or oh, I want to lose this trade. I was focused on the process, solely focused on implementing this new style of executing within, well, fair value gaps and upon the validation of them. So I decided to execute, but for the sake of this video, we'll just keep our entry here. Keeps the video cleaner. Where do we keep our stop loss? Well, great question. Didn't keep it right here at the, creation of this fair value gap because that would be way too tight for me. Pause. Where I decided to keep it, I kept it at the low of this fair value gap right here. Also, I wrote the confluence on my TradeZella that if we were to stop me out, this would be a retracement for the 15-minute fair value gap we formed, which I will show you guys that right here. we also had a 15-minute fair value gap. So I did acknowledge it completely, and I knew if we were to stop my trade position, it would have been a retracement for the 15-minute fair value gap, and I could have waited a little before actually looking to get into the trade. What did price action do upon my trade execution? Well, we literally immediately pushed to the downside. We got caught by this fair value gap right here. That's also why I kept my stop loss below it, for the potential in order for this to catch any possible trade retracement. Price action continued back to the upside. Now, I said earlier I trailed my stop perfectly today. What do I mean by that? Well, originally my stop loss was right here. Upon making this push back to the upside, I trailed it to this 1 minute low that had swept out these micro lows right here. Then continued to trail it again right here once price action made a slight higher push. Now, price action ended up making a stronger push to the downside. We could see that right here. This was the push, taking out these lows once again, continuing back to the upside. However, at this point we had formed a new bearish fair value gap, showcasing, okay, we're beginning to have potential to validate bearish confluence. Typically, I will not execute at the top of a rally. This is my rules. I've said this months and months ago. You can go back to older videos, but I will never, ever, ever typically execute at the top of a rally or at the low of a liquidity sweep. So, in this sense, I will never execute. Oh my gosh. Just mumbo jumbo. Bam, 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 bam. And bam, 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 bam. Typically, I will never execute here, and I will never execute here, because price action has all the potential in order to make a retracement and stop me out before continuing within my desired direction. And I know this and I acknowledge this, especially for today. So what I do, I manage my risk accordingly. During times where you execute in probabilities, manage your risk accordingly. I did have strong confluence and strong arguments showcasing bullish confluence to the upside. However, I was managing my risk and managing the probabilities I was playing within. I was managing my risk according to the probabilities I was playing within. That's how you say it. There you go. So upon seeing this bearish fair value gap formed, I started to, in my mind, validate bearish confluence, understanding that, okay, we have potential to continue to the downside, so I want to continue to manage my risk. So what I do, place my stop right there, allowed price action to continue to develop, because I knew if we were to take out this 1 minute low that we had put in, or really it's a 15-second low, we would have potential to continue back to the downside, validating or looking to validate this 15-minute fair value gap, then continue back to the upside, which that is exactly what happened. Price action stopped us out at a $100 loss, amazing trail stop loss, hit this 15-minute fair value gap, and continue back to the upside. Now, Lonnie, why didn't you just wait for the 15-minute? Because this is outside my trading time. My win rate decreases by 80% outside my trading time, so guess what I do? I don't trade outside of my trading time. If this trade idea were to have happened within my trading time, this is how it would have looked. Sharp turn model back to the upside, bam, right here, invalidation of this, valid or creation of a new bullish PD array, invalidation of what in specific? The bearish, basically flipping from bearish to bullish, targeting whatever highs, in this case, static 1 to 2 RR, and trailing it along the way. That's how it would have looked, but didn't happen within our trading time, so that's completely fine. Ended up taking the loss today, so what can we take away from today's trading lesson? Trailing stop loss and managing risk within market conditions that are more so, I don't want to call it 50-50 because we had a clear bias. However, for this example, we'll just call it 50-50 market conditions. Probabilities that aren't so clear at the moment. However, like I said, we did have a full understanding of where price action was looking to draw toward. Anywho, apart from that, managing risk accordingly, according to market conditions, and understanding, what's another one? I want to do this before the video's done. Understanding when to wait for certain price action retracements. Price action on the lower time frames will give you confluence in understanding when you will see these macro time frame retracements, like 15-minute blah blah blah, and it will also give you confluence when you will continue back to the upside. I was simply playing within confluence. Learn to play within confluence. That's all I have for you guys today. Hope you guys are able to take value from this. Love you guys. Peace.